Well, we sort of happen to hear from his experience in terms of the ICOs. He alongside his team is involved. So he is a globally known expert. But what we are expecting to hear from him is basically what really happens after ICO, after token sale. So this is going to be a bit quite an interesting angle as well.
Yes, yes. Okay. Just finalizing the technical details about putting the presentation on. Sorry, it's a bit last-minute presentation, which taught me a lesson. I should always have a crypto trading presentation on my laptop. So just, you have it, okay. So for those who were not here yesterday, just a quick summary of my history in terms of professional experience. So I was working in Greater China. I have been working there for about 13 years. And for the first 9 years, I was working as a private equity fund manager. And in 2013, I discovered Bitcoin. Two elements really put Bitcoin on the map for me. The first one was the Cyprus bail-in. I don't know if you remember what happened in Cyprus, but the government decided to take some funds from bank accounts. And in the media, even the mainstream media, start talking about Bitcoin at that time, saying that Bitcoin is a form of currency that no one can take away from a wallet. You have to send it. So it was quite interesting. And then there was IDG, a Chinese fund, which invested in a company called Coinbase. I think at the time Coinbase did a round of about $6 million. And today Coinbase is probably one of the largest valuations out there, but it's a private company, so we don't know for sure. But Coinbase had more than $100 million investment since then. So in 2013, the idea was to look at digital currencies more as a way to invest in startups and as a vehicle, which is today, of course, very popular with ICOs. At the time, I remember 2013, there was one form of ICO, was called Mastercoin. Was a new coin on the market and was probably one of the first ones there. So we organized the first incubator in the space and the first event in Singapore in 2013. And then I was nominated in the top 3 most influential investors in 2014. But at the time, to be honest, there were not so many. So Consilium is a London-based blockchain venture builder and accelerator and investment company. So we have invested in 17 blockchain companies since then. And it's the first company to IPO on the market as a blockchain company, as a blockchain investment. So in terms of digital currencies, what has been very important this year is the fact that we had this market cap spike, and that has really triggered a lot of attention. So what I experienced over the years is that when the price of Bitcoin goes up, when the price of digital currencies go up, it usually brings a lot of attention to the industry as a whole. So of course we know today that blockchain is used by banks, and banks don't necessarily like Bitcoin, etc. But at the same time, every time there is a price increase, it benefits the whole community, benefits the whole industry. So this is what happened this year. So this is a total market cap excluding Bitcoin. And we see this tremendous increase. And so it also triggered a lot of interest for the whole industry, really. So what is very important, and what happened in 2017, and June 2017 really, was this kind of inflection point where Bitcoin was not dominating, stopped dominating really the overall market cap of cryptocurrencies as it had done for basically since it started in 2009. So in 2017, we had this shift where all the other altcoins, we call them altcoins as alternative coins, they started represent a larger part of the market cap than overall than just Bitcoin. Now today, if you look at the market cap of Bitcoin today, since then, it's nearly $100 billion. And it is representing a bit more again than 50%. Today is around 58%. But still, that was an important time. At the same time, in June 2017, we saw ICO financing clearly overtaking any financing by traditional investors in the space. So 2017 seems to be a very important year for the whole industry, where we see, first of all, traditional investment being completely overtaken by ICOs, and I think more than double for now. And at the same time, we see the spike and increase of all cryptocurrencies. Now, this is a report which is older. This is from 2016 by Magister Advisors. But what is interesting to see is that they compare the total FX reserves of different currencies, and they compare it with the overall market cap of Bitcoin. And basically, this report at the time was saying that we are on the way for Bitcoin to represent the 6th largest reserve currency, although at the time the Bitcoin market cap was much lower. So I think if the same people who did this study were to look at it now, they would see that actually we're getting much closer than they thought. But I know the person who did this, Jeremy Miller, and he's now working for Consensus. So I don't think he will do it again. But it's an interesting study to look at the weight of cryptocurrencies in a macro way. I think we all today look at cryptocurrencies for very niche kind of usage. You know, you use Bitcoin for remittances, you use Bitcoin to buy products, of course, to exchange value on the internet. But there are not so many studies yet about the impact, the macroeconomic impact of cryptocurrencies. So this is one of the companies actually I've known for about 4 years now, or 3-4 years. This is a company, unfortunately, I didn't invest in, based in Hong Kong, and this has been started by former bankers, someone, Arthur from Citibank. And this shows this is a new type of tools that you can use when you trade cryptocurrencies. It's a futures market, and according to them, this is the most liquid Bitcoin US dollar platform today. It's called BitMEX, and as you can see, the numbers are quite relevant. We're talking about $54 billion of trading or volume of transactions for a year. So it's one of the first futures platform and derivatives platform in the market, and it gives you an idea that actually cryptocurrencies, the trading, is more sophisticated than you may think. So a lot of people think about exchanges, but there are a lot of derivatives, futures, forwards in the market. That's another one that I know quite well from London. This has been started by a former Goldman Sachs executive, and the reason why it's noticeable is because they have a deal with CME, and with CME they created the Bitcoin reference rate and the Bitcoin real-time index. So these are, as you may know, CME is really a very large group in the world of derivatives. They mentioned here, and this is an extract from their website, that they handle 3 billion contracts worth approximately 1 quadrillion annually. So this is the size of CME. And CME has partnered with this startup, Crypto Facilities, to actually get benchmark index prices in Bitcoin. So this shows again that Bitcoin price is important for trading, and also it's important for, we would say, traditional trading and traditional derivatives companies, like big groups like CME. And actually, if you go and check out Crypto Facilities, it's explained very clearly how they create this benchmark and this index, and all the mathematical formula for finding the price that they use for these contracts. So again, Crypto Facilities is for forwards in the world of Bitcoin. Now, I don't know if you're familiar with these resources, but these are also resources that traders can use regularly. Some of them are more technical than others. Crypto Compare has emerged more recently because of the ICO, in the fact that they have 300,000 registered users. These are people that used to work in the share type boards, you know, for stock markets, and now they're working with cryptocurrencies, and they list hundreds and probably more than 1,000 of different coins, different new coins. CoinMarketCap, you probably know, that's a very old website and a great reference. Brave New Coin is another company I know, started in New Zealand and started aggregating all the data, all the transactions that ever happened with Bitcoin since 2009, and a lot of data from exchanges around the world, all the exchanges basically. They claim they are gathering all the data available out there. CoinHeels is another company I'm familiar with in Korea, and they have a lot of information about ICOs, and CoinGecko from Malaysia also shows a lot of information about new coins and the pricing and the community. So what is interesting in this kind of platforms is that they don't just give you a price. They give you a price, but they also try to rank and try to assess the community, the level of technical achievement, what is a project. Because of course, as you know, a cryptocurrency like the ones that are being issued by an ICO, through an ICO, is not really only reflecting a price, it's also reflecting a project and the utility in this project and how this project is done, what milestone they reach, etc. So we're a little bit in the fringe between shares and Forex in a way. So these are just some resources I list out there for you. These are some of them you may recognize. I mean, I'm just listing some exchanges I'm quite familiar with. Bitfinex, you probably all heard before, probably one of the largest exchanges in the world and the largest liquidity out there. So for example, when I was showing you crypto facilities, in the index, they have to use different exchanges, right, to find the price of Bitcoin. And they removed, I know that they removed Bitfinex, for example, recently, because Bitfinex is now stopped trading, wire trading, and sending cash or US dollar to certain accounts. Kraken is also a long-standing exchange. Magner is one of the first derivatives trading platform you can leverage. So basically, you can borrow Bitcoin to do your position, similar to some forex platforms. For example, I failed to mention that on BitMEX, I remember that the leverage can be quite high. You can talk about 50 times and up to, I think, 200, 250 times. So it's for really risk takers, right? So I'm not endorsing any of this. So if you start trading, be careful, right? You have to be careful because these are high leverage trading. And as you know, it can go up and down. So Magner is a company we invested in and based in London. And apart from derivatives and basically you can long and short Bitcoin, they also have a savings account, which seems a basic service, but is one of the few that is doing that. So basically giving you interest on your Bitcoin. And the ones on the bottom are, I would say, apart from Shapeshift, which has been going for a while, which is basically a very easy way to trade coins, you know, to go from Ether to another altcoin, for example. I would say the new ones coming are Salt lending, quite interesting, where you collateralize your crypto and you borrow money from it. They did an ICO, and I guess the token symbol is SALT, S-A-L-T. And the other one that I put there is called Leverage. And Leverage is a decentralized margin trading exchange, which is quite innovative because already to do a decentralized exchange today, there are many of them like OAX and others, BitSquare, but it's quite a technical accomplishment. I mean, it's not that easy to achieve, but Leverage is pushing that further by actually adding a leverage facility through it. that's it. I'm opening the floor if you have any questions. Yes.
Thank you. Eddy, thank you. I have a question about, do you also heard about it? The IMF from Mr. Lagarde, Miss Lagarde, sorry,
yes, yes.
and also from the Norini, the economic crisis. They also advised to IMF about the SDR. Did you hear it?
Ah, yes. You mean the reserve currency?
Yeah, reserve currency from the basket currency. How will you act or react against this type of game if they will be in the ICOs and the cryptocurrency?
Are you talking about a warning from them, or are you talking about the SDR trying to incorporate cryptocurrencies in some way?
Yeah,
or?
they will be in the game, I think, as an IMF with the basket fiat currencies.
Yeah, yeah. Well, I think, this is all, cryptocurrencies and Forex in general are all very liquid assets. So I guess we cannot blame, large institutions for trying to replicate or to model other products. I mean, it is very interesting to see that there is this kind of love-hate relationship between cryptocurrencies and governments in general and large institutions. So for example, on one side you have China banning ICOs. On the other side, we all know that they have been fighting on the SDR issue for a long time. And we could think that, maybe it's not such a stretch of imagination if China would adopt one cryptocurrency as a way to maybe, reduce the influence of the US dollar on their economy, for example, simply. But I think also what is interesting is the fact that governments that have been sometimes, let's say, in not favoring cryptocurrencies, also find it ironically quite useful. And if you look at some Scandinavian countries who are trying to move the society towards a cashless society, one of the reasons why they want to remove cash is because they want to track what people are basically paying and how they're paying themselves, how they're transferring value, right? And of course, once you track it through a system that could use blockchain, you can also tax everyone quite easily, and you can also track where everybody's using the funds. So I think we have this ironic situation where the government could become one of the beneficiaries of a currency, a cryptocurrency, which was initially created to be outside of the system and be outside of the banking system specifically. Any other question about cryptocurrencies and trading?
It's amazing to see that there are more derivative products underlying cryptocurrencies as well as leverage products, right, across the board. So how do you think that this blossoming of the new products is going to help investors hedging across the board?
Yes, exactly. So you're right to point this out. I think that's one of the reasons why there is an attraction here, is because initially Bitcoin was, in the first few years of trading Bitcoin, when the volume was much lower than it is today. I mean, just to give you an idea, today you have some exchanges trading $300 million a day on cryptos, and mainly usually Bitcoin and Ether. So initially you didn't have, I would say up until 2013, 14, you didn't have any sophisticated product out there. But of course, as soon as you move into more kind of professional type of form of trading, you need to long, you need to short, you need to hedge, as you were saying. And you're right, these tools, like a few of the platforms that I've been showing, like BitMEX and Crypto Facilities, and there are others, are enable the daily traders to do that, or could enable as well banks or very large corporations, for example, which use Bitcoin or cryptocurrencies to move large amounts of money through different areas, different regions, could enable them to use cryptocurrencies efficiently and not be bothered and disturbed by the usual volatility factor. Because of course, every time you talk to traditional or legacy system banking, etc., they mentioned the volatility of cryptocurrencies. And I think this year it has been noted that some economies start to show that Bitcoin is not as volatile as some currencies. So I think the Bitcoin volatility has shown actually some decline over the years, and as it matures, you know, as a financial product, I think we'll see that as well. And obviously these tools, and of course the arbitrage that's being done by a lot of traders. So over the planet, you have a lot of market makers, you have a lot of traders who arbitrage, are reducing this volatility as well.
So do you think that the marketplace is sort of stabilizing to ensure the price discovery for those currencies?
For the major cryptocurrencies, yes. I mean, of course, the issue now, if you look at ICOs, the problem is the volume of trading is usually lower, much lower than the large crypto. So the large crypto, you're talking about $2 billion a day or $1.5 billion a day for Ether or Bitcoin. And for some ICO coins, even if they are known, maybe it's going to be 200 Bitcoin a day. So it's maybe $1 million, right? So there is such a discrepancy that, you know, for the moment, the market for ICO coins trading is much smaller. If you look at one coin specific at a time. If you look overall, it's quite healthy, but if you look at one coin at a time, and of course the fact that, for example, in October there are 200 ICOs planned doesn't help, and there will be more and more. So a lot of work for market makers and traders out there.
No questions. So thank you very much, Eddy, for this very.
Sorry. One more. If nobody is asking, what do you think about the differences between the asset-backed currencies and the other story-based, let's say? Because gold and the other precious metals are really interested in Turkey, and also try to convince the government as well to collecting all the golds from the pillow. Then maybe we can create another story about gold-backed. I know, as far as I know, there are two more from Dubai. One more, the 1 gram. Maybe you heard about it, and also another one is from England.
Yeah, there are many, and there have been many asset-backed currencies until now. I mean, the main problem we had in the past, I don't know about the recent ones, is that you don't necessarily know that they have audited the reserves, you know, in a way that you feel confident that they actually have the gold, you know, which is the usual problem with this kind of schemes or cryptocurrencies. I mean, so hopefully in the latest one, you have the actual auditors, you know, if they take a big four, obviously, and they say, if you have Deloitte or KPMG saying this is a gold, you know, then everyone feels, you know, safe. But so I haven't seen in detail the latest ones, but obviously that's part of the assessment you have to do as an investor. If you buy these coins, you have to make sure they actually have the gold or they actually have the assets. Now, what is happening these days is there is more and more commodities that are being linked to coins. So it's not only gold now, you have other precious metals, etc. And for various reasons. So one project that we are looking at is actually to help mining and natural resource companies fund their activity by issuing tokens. I mean, it's still in the works. We're just, you know, we're working with Gibraltar on that. It's not out there yet. There is no coin or anything. But this is a type of project that are coming up, yes. So more and more asset-backed. But as I said, as a buyer, if you're looking into it as an investor, make sure that the assets are there. Thank you. Thank you.
So I guess there is no point of being shy to ask questions, but I mean, some people might be. So let us take advantage of Eddy being here around, right? Because he is a very difficult person to set a meeting with. He travels all the time. So let us do that, I mean, right out of the door. Well, thank you very much, Eddy, again, for the excellent presentation.